All right, guys. A lot of people have been asking tips and tricks and how I started learning charts and where to begin and all that good stuff. So I figured to make a quick, short video on exactly. Well, I guess I'll start a few videos on kind of the basics, and I think 3-4 hours of the stuff you could probably learn or do better than 90-95% of the people just by learning how the algorithms trade and some of the bigger funds and how the bigger traders do it. So anyway, so what you're looking at is the Nasdaq chart. Everything. These are the red and white things are called candlesticks. The skinny part sticking up on top or below them, those are called wicks. And it's just a cheesy analogy, but they're basically, each one of these is a representation of price activity over a given time. And if you look down here in the very bottom left says QQQ. Next to it there's a 1M, that stands for 1 month. You can change the month right here, the duration you can look at in weeks. That's each one of those represents a week. If you do that, you can go down to days. 1D is for 1 day. And basically, you can go all the way down to minutes and seconds if you want. And usually, the time frame is a majority of big traders, a big swing. The big hedge funds, the people that do long-term plays, big index funds, they stick to monthly charts, weekly. They don't really get into the weeds past that. And there's a lot of reasons for it, but ultimately, it's kind of like looking at the ocean liner versus like the small boat, or the aircraft carrier. It takes a long time for that sucker to turn around, and which, if you think about like the volume of boats in the ocean, the big boys riding those giant guys, it takes, they just look at the bigger picture. They don't care about what's going on the smaller time frames. But so anyway, so you see here, the white ones indicate the trend's going up, meaning the price opened up towards the bottom and it closed towards the top of those wicks. So we'll just keep zooming in. Like look up here, like this.
Oh wow. Okay.
Keep zooming in. So yeah, each one of these is 1 month. You can see at the bottom is July, the third one from the left, July, August, September, then October in the middle, November, December, and yeah, and again, if the price is going up, the price usually enters somewhere at the bottom, and at the end of the month, it exits at top. And then you'll notice there's different thicknesses to that fat, meaty part, and that just represents where the volume, the total amount of dollars being traded, where it was. So if they're really skinny and there's like one little area, like one little chubby area in the candlestick, that usually it just says the price may have spiked up high, but it wasn't there very long and it went back down, and the majority of trading just happened in that very narrow zone. If the and conversely, if they're really thick, then the price action was kind of everywhere up and down that range. And if you look at the bottom, there's green and red. Those are volume indicators. That just tells you how much volume was traded during that given time. And this phone app, some apps you can highlight, click on them, it'll tell you the actual dollars traded over time. This one doesn't, because this is TradingView, by the way. Anyway, so and then another thing, these lines underneath them, these are just called moving averages. They just literally do what they say. They take the average price range of these candles over a given time, and kind of do a line graph, and that is also a representation of the trend. And you can think of the trend as like the water in a river. And basically you don't want to fight the trend, you just want to trade with it. Just like in a river, you don't want to swim against the current, you want to swim with it. It's a better use of energy. Risk reward is much better, in just don't you can't really fight the flow, just go with it. And that analogy works in a lot of things in life, but same thing with trading. So anyway, so those are candlesticks. And then it also, there's patterns, there's things to look out for. They tell you a lot of things. if by where the meat of the stick is, if like these up top, see these three at the very top, they're skinny. The range is very thin. And a very top one, most of the range is towards the bottom. Like it tried to hit 340, but it couldn't. We'll just keep zooming in. This little middle one right here. So it started down here. Most of the trading was right here, the 319, 318 range, and it spiked up right here to 337, 338. But it wasn't enough buying action. And so the market said, nah, we don't like it up there. It's too expensive. So it dropped here. And then the next month, it's still stuck in that range. And the majority of the market said, you know what, we don't like it. We don't think it's value. Like, this doesn't reflect the value we think. So the sell-off happens during that month. And then you'll see towards the bottom, it bottomed out at 297. And if you look at the very bottom down here, see how the volume, it was all red. So the majority action was not buy action, it was sell action. And it increased over time. So first 3 months of 2021 right here. So, and also one thing to note, when you see a peak, there's a pattern. Let me see if I can draw this guy. I'm still learning this. They just updated this chart. So, I mean, the app. So every time they do it, they move things around. Let's see. I'll try to brush. So anytime you see this pattern right there, it's like a little fat, stubby, like a tall, skinny thing. That's a hammer, and usually signals a trend change, like a reverse. But the water's changing course. It's like a bend in the river. So essentially, that's just a bend in the river, and it's going to go down. It's indicating, because of volume and the price action hasn't gone up, that it's going to likely head south. And you can even do a further analysis. Let's just go into a weekly time frame. It gives you more information. Oops, I should turn that off. And okay, so I don't know how to operate this app yet. Anyway, so you can see now each bar is 1 week. That's what the W stands for. And so weeks 1, 2, and 3, we had a drop, and then that moving average, again, another thing. Look at it. It bounced. Most of the meat kind of sat on the moving average. The market said, you know what? I think it's okay for now. And then, those interest rates, a lot of stuff with the Fed, a lot of the fundamental things affect technical analysis. So they are interlinked for the most part. More so in the big market. Smaller cap stocks, yes, they're a whole nother ball game. But anyway, so the last 2 weeks we've had a little positive. It looks like it's positive so far. Last week it was okay, it bounced back. This week we just started. And if you look at the right, it says the price is 318, and it says we got 3 days, 18 hours left in the week. So after the end of 3 days, 18 hours, we'll have a new monthly candle. And I have a feeling it's just going to try to break 340 again. It's just going to keep crawling up. Let's see if I can draw this. And I say that because we already got the stimulus money. There's really no other stimulus expected. And especially with Biden, I don't think there's going to be very much more stimulus going. So what else do the markets have to look forward to pump them? So I have a feeling it's going to do something like that. People are going to start buying shorts. And I bet you will meet this other moving average. This guy that comes across this way. And I bet you will kind of bottom out 290, then it will go sideways. And then these things mimic each other. It's just human nature. The patterns do follow each other over time. So anyway, so those are candlesticks. And again, I don't know how to work this. That's just how to read them. There are guides like Investopedia. You can go look up candlestick chart guides. They help a little bit, like for trend reversals when you see, on the monthly. Look at this monthly. Oop, that looks like crap. But when you see these 3 things in a row like that, okay, that says something. It's kind of like a basketball. You're shooting up in the air. Now it's kind of at the very top of the arc, and it's letting gravity take over. So, again, without some good economic news to be a legit reason to keep prices going up, besides printing money, You know, I think we'll need to look for those reasons for it to be bullish, but I think we can expect a pullback. Anyway, that's that. And then I think the next one we'll do moving averages, you know, these lines below. We'll get more involved with those. And there's a few versions of them, different time zones, different strategies that different people do, but I'll kind of go over a few of them and just go over the ones that the majority of you guys need to be focused on, because you're not day traders, you're just swing traders, or you just trade, you know, long-term patterns. So those are the ones that make the most money anyway. So